Let's dive deeper into the action with the markets reporters. Abigail, what are you watching?
You know, I'm still thinking about those FANG stocks, Caroline, because they really were a drag today. And one reason the major averages didn't finish solidly higher. Take a look at Facebook, as you were mentioning earlier. Regulatory probes, both Facebook and Google, Alphabet really bracing for antitrust probes from the state. So you see those shares down 1.8%, the worst in about 2 weeks. But we see Amazon, Netflix, and Alphabet all lower. And of course, that overhang of big tech being regulated has weighed on this space. Let's put it into the context of a weekly chart, because something important did happen this week. The FANG trade closed back above its 40-week moving average. Technically, that's a positive. Back in 2015 to the high in 2018, this complex rising about 170%. But we can see from 2018, basically stuck in this range. The Facebook social media woes, the big tech regulation fears, right now down about 10% from the recent high. A big spread, Sarah, to what the S&P 500 is doing. These stocks have really got to get on board if the S&P 500 is going to continue climbing higher. Very important to keep an eye on these FANGs. This chart is not so bullish or bearish for that matter. It's really stuck in sideways, so it's going to be interesting to watch and see what happens with these FANG names.
Thanks, Abigail. Well, something that clearly has not been stuck sideways has been the bond market. And I do want to bring it back to that space, because oftentimes when you have conversations about the slide we've seen in yield, many bring up supply and demand dynamics and global forces. The idea that there are so many negative yielding bonds overseas that if investors are looking for yield or for safety, they have to come to the U.S. And that in demand, that in place is pushing U.S. yields lower. Well, Deutsche Bank's Torsten Slok came out today and said not so fast. He pointed to this chart right here. As you can see in the white line, that is your ISM manufacturing index. And if you look at the yellow line on your screen, that is the 10-year Treasury yield. And you can see that they move pretty closely together. They're highly correlated. Well, Slok is saying that it actually looks like the slide in 10-year Treasury yields is more so being driven by U.S. fundamentals, not actually by global forces. And if it was the opposite, you wouldn't see this correlation that you're seeing in the chart. So absolutely something to keep in mind, especially when some are saying that any recession fears, you don't have to worry because you have global forces at play.